My name is Zara, and I want you to stop whatever you are doing right now. Because what I am about to share with you in the next 15 minutes could genuinely change the way you think about money, safety, and the world around you. Not because I am going to sell you something, not because I am going to promise you that silver will make you a millionaire by next month, but because there is a pattern forming in the world right now, a pattern that has repeated itself throughout history, and the people who recognized it early were the ones who protected their wealth while everyone else was left scrambling. I am talking about silver. I am talking about the Iran crisis, and I am talking about what happens when geopolitical fire meets a metal that the entire modern world quietly depends on. But before we get into that, I want to tell you something honest, something personal. Because this conversation does not start with a price chart. It starts with a lesson I learned the hard way. Years ago, I thought I understood money. I had a steady income. I had savings sitting in a bank. I told myself that global politics was noise, that precious metals were for people who were afraid of progress, and that the safest thing I could do was stay the course, trust the system, and not overthink it. Then I watched a geopolitical crisis unfold in a region most people had ignored. I watched oil prices jump. I watched certain currencies lose value almost overnight. I watched the stock market shake. And I watched a small group of quiet, patient investors, people who had understood the connection between world tension and real assets, simply wait. While others panicked, they held. While others sold, they stayed calm. And when the dust settled, their portfolios told a very different story than mine. That day changed how I think about money forever. So today, I want to give you what nobody gave me back then. A clear, honest, calm explanation of why the Iran crisis matters to your financial future, why silver sits at the center of this story, and what a long-term thinker should actually do with this information. Let us start at the very beginning. When we talk about the Iran crisis, we are not just talking about headlines and political drama. We are talking about one of the most strategically sensitive regions on the planet. The Middle East, and Iran specifically, sits at the crossroads of global energy supply, military tension, trade routes, and international sanctions. Any serious escalation in that region does not stay in that region. It travels. It travels through oil prices, through inflation, through currency values, and through the behavior of global investors who suddenly start asking one very old and very important question. Where do I put my money when the world feels unstable? And historically, that question has one answer that keeps coming back, again and again, across centuries and civilizations. Real assets, hard assets, things that governments cannot print and banks cannot erase. Gold gets most of the attention in these conversations, and gold deserves attention. But silver is the quiet story that most people miss entirely. And missing it has been one of the most expensive mistakes ordinary investors have made during periods of global tension. Here is why silver is different. Here is why this metal deserves your serious attention right now. Silver is not just a store of value the way gold is. Silver is an industrial metal. It is used in solar panels. It is used in electronics. It is used in medical equipment. It is used in military technology and defense systems. And here is the part that most people do not realize until it is too late. When geopolitical tension rises, defense spending rises. When defense spending rises, industrial demand for silver rises. At the exact same moment that investors are rushing towards silver as a safe haven, the industries that physically consume silver are also demanding more of it. That is a demand squeeze from two directions at once, and the supply side of silver is not keeping up. Mining silver is slow. Building new mines takes years. The major silver-producing countries face their own political and economic challenges. And above-ground silver reserves are not as large as many people assume. This is not a metal that can simply be conjured into existence, because the market suddenly wants more of it. So you have rising demand from investors, rising demand from industry, and a supply chain that cannot respond quickly enough. This is the foundation of the silver story. And the Iran crisis is not the cause of this story. It is the match that could light a fire that was already waiting to burn. Now, I want you to sit with that for a moment, because understanding the foundation is more important than reacting to the headline. Most people hear the words Iran crisis and silver explosion, and they immediately want to know one thing. Should I buy silver tomorrow morning? And that is exactly the wrong question. That is the panic-driven, headline-chasing mindset that has cost ordinary investors enormous amounts of money throughout financial history. The right question is different. The right question is this: do I understand why silver has value? Do I understand how global instability affects the assets I hold? And do I have a long-term strategy that accounts for the kind of world we are actually living in? Those are the questions of a serious investor. And those are the questions we are going to spend the rest of this video answering together. Because Zara is not here to give you a hot tip. Zara is here to give you a framework, a way of thinking about money that will serve you not just during this crisis, but during the next one and the one after that. In Part 2, we are going to go deeper into the specific connection between Iran, global energy markets, and why precious metals historically explode in value during exactly this kind of tension. We are going to look at the pattern, not the panic. But first, I want you to think about something before you move on. Think about your current financial position. Think about what you own. Think about how much of what you hold is tied to paper promises, and how much is tied to real, physical, tangible value. Think about what would happen to your savings if inflation climbed another 10% over the next 2 years. Think about what would happen if the currency you are holding quietly lost purchasing power while you were busy living your life. These are not comfortable questions, but they are necessary ones. And the fact that you are here, watching this, asking these questions, already puts you ahead of most people who will never have this conversation until it is far too late. In Part 1, we laid the foundation. We talked about why silver is not just a shiny metal. We talked about the dual demand pressure it faces during geopolitical crisis. And we talked about the mindset shift required to think about this clearly rather than emotionally. Now I want to take you deeper. I want to show you the pattern, because here's the truth about financial history that most people never study. The same sequence of events has played out over and over again throughout the last 100 years. Every time there is a major conflict or crisis in an energy-rich region of the world, a very predictable chain reaction begins. First, oil prices become uncertain. When Iran is at the center of tension, the Strait of Hormuz becomes relevant. Roughly 20% of the world's traded oil passes through that narrow stretch of water. Any credible threat to that passage does not just affect oil. It sends a signal through every energy-dependent economy in the world. And every economy is energy-dependent. Second, when energy costs rise, inflation follows. Not immediately, not overnight, but within months, the ripple effect of higher energy prices works its way into transportation costs, manufacturing costs, food prices, and the general cost of living. Central banks face a difficult choice between fighting inflation by raising interest rates or supporting economic growth by keeping rates low. This tension creates uncertainty in bond markets and equity markets. Third, when uncertainty rises in paper markets, money begins moving toward hard assets. Gold moves first because it is more visible and more trusted by large institutional investors. But silver follows, and when silver moves, it often moves faster and further in percentage terms than gold does, because it is a smaller market with less liquidity. This is not a theory. This is a pattern that has played out during the oil shock of the 1970s, during Gulf War tension in the early 1990s, during the post-2008 financial crisis era when precious metals saw some of their strongest multi-year runs in modern history. The Iran crisis today is not identical to any of these past events. No two crises are ever identical. But the underlying mechanics are the same. Energy uncertainty leads to inflation pressure. Inflation pressure leads to loss of confidence in paper currency. Loss of confidence in paper currency leads to demand for real assets. And silver sits at the intersection of all of this. Now, I want to address something directly, because I know what some of you are thinking right now. You are thinking that you have heard this kind of talk before. That silver was going to explode 5 years ago. That gold was going to reach $10,000. That every geopolitical crisis gets hyped up and then fades away without the dramatic financial movement that was promised. And you are right to think that. Healthy skepticism is a sign of financial intelligence. But here is the distinction I want you to understand. There is a difference between short-term price predictions and long-term structural trends. I am not here to tell you that silver will double in the next 3 months because of what is happening with Iran. Anyone who tells you that with certainty is either guessing or selling something. What I am telling you is this. The structural conditions for silver appreciation, the industrial demand, the supply constraints, the inflation environment, the de-dollarization trend happening quietly among certain economies, these conditions do not disappear when one crisis fades. They are building, slowly and steadily, beneath the surface of the daily news cycle. The Iran crisis is a catalyst. It is not the cause. And understanding that difference is everything. A catalyst accelerates something that was already in motion. A match does not create a fire where there is no fuel. It ignites fuel that was already there, already waiting. The fuel for silver was already accumulating before this crisis began. The green energy transition is driving silver demand higher every single year. Solar panel manufacturing consumes enormous quantities of silver, and the global push toward renewable energy is not slowing down. Electric vehicle technology uses silver. Medical device manufacturing uses silver. The world is becoming more dependent on silver precisely as the supply of silver is becoming more difficult to grow. Add to that the geopolitical instability that is now spreading across multiple regions simultaneously, not just Iran, but tensions in other parts of the world that are reshaping trade relationships, military alliances, and currency systems. And then ask yourself this simple question. In a world that is becoming more unstable, more inflationary, more dependent on silver for the technologies of the future, is it reasonable to think that silver will simply stay at current prices indefinitely? The answer, if you think clearly and honestly, is no. But the follow-up question, the one that actually matters for your financial life, is not whether silver will rise. It is whether you will be positioned thoughtfully and patiently before the movement happens, or whether you will be chasing it after everyone else has already moved. That is the difference between the investor and the speculator. The investor builds a position based on understanding. The speculator reacts to headlines based on fear of missing out. Zara wants you to be the investor. In Part 3, we are going to talk about the practical side of this. We are going to talk about the common mistakes people make when they try to add silver to their financial strategy. Because knowing that silver has potential is only half the story. Knowing how not to destroy that potential with poor decisions is equally important. This is the part most financial content creators skip, because it is not exciting. It does not feel motivating. It does not make people feel like they are about to become wealthy. But I believe this is the most important part of the entire conversation. Because the graveyard of personal finance is not filled with people who missed opportunities. It is filled with people who found the right opportunity and then destroyed it with the wrong execution. Let me walk you through the most common mistakes people make when they approach silver during a period of geopolitical crisis. And as I walk you through each one, I want you to be honest with yourself about whether you recognize your own thinking in any of these patterns. The first mistake is buying out of panic. When a crisis hits the headlines, there is a psychological phenomenon that takes over rational thinking. It is the fear of being left behind. It is the voice that says everyone else is moving, and if you do not move right now, you will miss everything. This voice has destroyed more wealth than almost any other force in personal finance. When you buy an asset out of panic, you almost always buy it at the wrong price. You buy it after the first big move has already happened. You buy it when sellers are happy to let you have it at inflated prices because demand is temporarily emotional rather than rational. And then, when the initial panic fades and prices correct, you are sitting with a loss and a very uncomfortable feeling that confirms your original suspicion that these things never work out. The solution is not to be fearless. The solution is to build your understanding before the crisis, so that when the crisis comes, your decision is informed rather than reactive. If you are watching this video right now and the Iran situation is already dominating headlines, the question is not whether to panic buy silver tomorrow. The question is whether you understand silver well enough to make a thoughtful, sized, long-term decision about whether it belongs in your financial strategy. The second mistake is going all in. This is the other extreme, and it is equally dangerous. Some people hear a compelling argument, feel the logic of it deeply, and conclude that the smart move is to put everything into one asset. This is not investing. This is gambling with extra steps. No matter how compelling the case for silver is, no matter how clear the geopolitical picture looks, concentration risk is real. Events do not unfold the way we expect them to. Timelines are almost always longer than we think. The silver thesis might be entirely correct, and silver might still spend 3 years moving sideways or even declining before it makes its major move. Can you emotionally and financially survive that period if your entire savings is tied up in one metal? The answer for most people is no, and when they cannot survive it emotionally, they sell at exactly the wrong time, locking in losses right before the move they originally believed in finally happens. Position sizing is not a boring technical detail. It is the discipline that determines whether a correct investment thesis actually results in a profit for you personally. The third mistake is confusing paper silver with real silver. This is a nuance that most beginners completely miss, and that can have serious consequences during exactly the kind of crisis we are discussing. When you buy silver through certain financial products, certain exchange-traded funds, certain futures contracts, certain certificates, you are not actually buying silver. You are buying a promise that is tied to the price of silver. And in normal market conditions, that distinction might not matter much. But in a genuine crisis, in a scenario where geopolitical tension is severe and financial systems are under stress, the difference between owning a paper promise and owning a physical asset becomes very significant very quickly. There is a concept in financial circles sometimes called rehypothecation, which means that the same underlying asset can be promised to multiple parties simultaneously. The details are complex, but the simple version is this. In a serious crisis, you want to know with certainty what you actually own. Physical silver, held properly and securely, gives you that certainty in a way that paper silver does not. This does not mean you should never use any financial products related to silver. It means you should understand exactly what you own and what you do not own when you make these decisions. The fourth mistake is ignoring storage and security. If you decide that physical silver is appropriate for your situation, the conversation about storage is not optional. Silver is heavy. It is tangible. It requires thought about where it is kept, how it is insured, and how it will be accessed if you ever need it. People who skip this conversation often end up with silver stored in insecure places, inadequately insured, or in forms that are difficult to sell quickly if necessary. This is not meant to scare you away from physical silver. It is meant to make sure you treat it with the same seriousness you would give any significant financial asset. The fifth mistake, and perhaps the most psychologically subtle one, is treating silver as a get-rich-quick vehicle rather than a wealth preservation tool. Silver in the context of a geopolitical crisis is not a lottery ticket. Its historical role, its most consistent and reliable role across hundreds of years of financial history, has been as a store of value, a hedge against inflation, a protector of purchasing power during times when governments and institutions are under stress. The people who have benefited most from silver over long periods of time are not the ones who tried to trade it for a quick profit. They are the ones who understood its role in a diversified, long-term wealth strategy and held it with patience and discipline through multiple market cycles. If you are approaching silver looking for a fast return, the Iran crisis headline might feel very exciting right now. But excitement is not a strategy, and the market is very skilled at separating excited people from their money. The final part. I want you to take a slow breath before we begin this section, because what I am about to say to you is not exciting. It is not designed to make your heart race or make you feel like you are standing at the edge of a great discovery. It is designed to make you think clearly, and clear thinking is the most valuable thing you can take away from any financial conversation. Let me start with the warning. The title of this video uses the word explosion. It talks about a crisis. It is designed to capture attention, and it did capture yours. That is the reality of how information travels in the modern world. And there is nothing wrong with being drawn in by a powerful headline, as long as you have the wisdom to move past the headline and find the substance beneath it. But I want you to understand something very clearly. Markets that are built on crisis narratives are dangerous places for ordinary investors. When an asset story is primarily driven by fear and geopolitical drama, the people who profit most consistently from that story are almost never the retail investors who rushed in after reading a headline. They are the sophisticated, patient, well-capitalized investors who built their positions slowly and quietly before the headlines arrived, who understand the asset deeply, and who have the financial resilience to hold through whatever volatility comes next. That is not meant to discourage you. It is meant to redirect you. It is meant to make sure that if you decide silver belongs in your financial life, you enter that decision with your eyes open, your position sized appropriately, your time horizon set realistically, and your emotions as far removed from the decision as possible. The second thing I want to say is about the nature of the Iran crisis itself. Geopolitical situations are genuinely unpredictable. Iran has been a source of regional tension for decades. There have been multiple moments over the past 20 years where observers predicted imminent, dramatic escalation, and the situation de-escalated instead. There have been other moments where the situation evolved in ways nobody predicted. Anyone who tells you with confidence exactly how this crisis will unfold and exactly what it will do to silver prices is not a financial analyst. They are a fortune teller. What we can say with reasonable confidence is this: the structural backdrop for silver is supportive. The long-term demand trends are real. The supply constraints are real. The inflation environment is real. The de-dollarization trend among certain global economies is real. These are not fantasy scenarios invented to justify a price prediction. They are documented, measurable, ongoing trends. The Iran crisis may accelerate some of these trends temporarily. It may create a short-term spike in precious metals prices. It may also fade from the headlines in 3 weeks and be replaced by an entirely different story. The honest answer is that we do not know which of these outcomes will unfold, and anyone who claims certainty about short-term price movements in any asset is not someone you should trust with your financial future. The third and final thing I want to leave you with is this. The real lesson of this entire conversation is not about silver. It is about you. It is about the kind of financial thinker you want to be. The world is changing. The geopolitical order that defined the last several decades is shifting. Currencies are being challenged. Supply chains are being reorganized. New alliances are forming. Old certainties are dissolving. In this environment, the most dangerous thing any ordinary person can do is assume that the financial strategies and assumptions of the past 20 years will automatically continue to serve them well in the next 20 years. This does not mean panic. This does not mean selling everything and buying gold and moving to a farm. It means being thoughtful. It means asking whether your current financial position is as resilient as it needs to be for the world as it actually is, not the world as it was 10 years ago. It means asking whether you have any exposure to real assets or whether everything you own is a paper promise made by an institution that may face pressures you cannot currently predict. It means asking whether your time horizon is realistic, whether your emotions are driving your decisions more than your thinking, and whether you are learning about money from people who are genuinely trying to educate you or from people who are primarily trying to sell you something. Silver may be right for you. It may not be. That answer depends on your specific life and situation in ways that a YouTube video cannot fully address. But the questions I have asked you today, those questions are right for everyone. Every person who is serious about building and protecting wealth needs to wrestle with them honestly. Zara will leave you with one final thought. The people throughout history who have navigated periods of great disruption and emerged with their wealth intact were not the people with the most information. They were not the people who predicted the future most accurately. They were the people who understood the principles well enough to stay grounded when everyone around them was losing their footing. They were the people who had built their financial foundation on something real, something they understood deeply, something they believed in with evidence and reason rather than excitement and fear. That is what I want for you. Not a quick trade, not an overnight fortune, a foundation, a framework. A way of thinking about money that serves you for decades, through crises and recoveries, through inflation and deflation, through the storms we can see and the ones we cannot see yet. Thank you for spending this time with me today. Thank you for choosing depth over noise. And whatever you decide to do with what you have learned here, decide it slowly, decide it clearly, and decide it for your long-term benefit, not your short-term excitement. This is Zara. Stay patient, stay informed, and protect what you have built.